Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about a concept that it's like picking up dollars off the side of the road. And what do I mean by that? Let me kind of preface this and let me show you the environments that I'm talking about where this would be actually favorable. Um, Interest rate decisions and the U.S. NFP non-farm payroll reports are huge events in the forex market, and big money, money managers, hedge funds, pension funds don't like to place huge bets, huge trades before these announcements, and so the market tends to get mundane and kind of dull. And just to show you an example of some of these that we had this week, we had the Australia interest rate decision on Monday night. We had the Canadian interest rate decision on Tuesday. On Wednesday, we didn't have much. On Thursday, we had the interest rate decisions from the Bank of England out of the UK and out of the Eurozone for the Euro. And then on Friday, we've got the non-farm payroll reports and the unemployment reports. That's your employment and unemployment reports for the U.S. These are huge reports, these interest rate reports and the NFP reports, and so the big money stands aside during these times, and it causes the sharp trends to cease generally, and it makes it to where typically the market goes into dull ranges. And that sets up the environment a day or two ahead of these events for what I call picking up dollars off the side of the road. Now, let me zoom in on this, and you can see what I'm talking about. These ranges are about 15 pips wide, and what I would be looking for is a 5 pip gain. And so a mini lot pip generally is about $1 a pip, so that would be about $5 for a 5 pip move. So that would be like picking up $5 bills if I got a 5 pip move off of one mini lot. If I had an account that could support 4 mini lots, then that's like picking up $20 bills off the side of the road. If I have an account that can support 10 lots, 10 mini lots, that is it's like picking up $50 bills off the side of the road. And so what you do is you wait until these dull ranges start to appear, which can happen 1 to 3 days before the interest rate announcements and 1 to 3 days before the NFP. And you'll just have to watch and see how the market's moving. But once it starts to slow down and dull down and it loses its trending edge and starts to form itself into a range, that's when you know you can start looking for these opportunities to pick money up off the side of the road. And what you do is you wait until the bottom band is pierced and the pair comes back into the band and you buy, and then you can either get your 5 pips. Many times your 5 pips will happen by the time it reaches this halfway point, this middle 20 SMA line or EMA line on some charts, and then you can short again once it pretty much hits your top line and it comes back down towards your 20 SMA. Then you've got your 5 pips on your short, and so this is a great way to play this, particularly on pairs that have small spreads like euro dollar, which is what we're on right now. We're on a 5 minute chart with the euro dollar, and we've got the Bollinger Bands placed on the chart at traditional 20 and 2 settings. So just like your chart package will come stock with. And again, you just buy. You're basically buying your bottom band as the pair comes back into the band, selling 5 pips up, and then shorting once your top band is hit, and closing out that short when it's 5 pips down, and so you've made 5 pips this way and 5 pips this way. And again, that's where you're picking up your $5 bills, your $20 bills, your $50 bills, depending on what type of, in other words, how many mini lots you're able to support in your account. Now these tend to be fairly safer times in the market because the big money steps aside, and so big, huge breakouts and momentum moves tend to not happen. However, you'll notice that I've basically defined my range by my lines, and so I can keep extending these out as the pair moves. And if it were to notably break, notably above or below, that would be my warning sign that that a new trend move could be happening. But the likelihood of that happening is very small because of the big money that pushes this market around being non-existent at that time. And so they never like to place any big orders before these unknowns, which are, in other words, they don't know what the data is going to be before it comes out. Once the data is released, the interest rate decision or the employment information is released, then about 30 minutes to about an hour and a half afterwards, the big money will finally make its move back in. Now, you want to make sure that you're out of these moves completely and back into cash and not trading the strategy a good hour or two at least before your event. So what you ought to do is go through your economic calendars on dailyfx.com or on forexfactory.com or any other site you're comfortable with. Pull up their economic calendar and mark on your calendar, you can get a physical calendar if you want to, when different countries are going to have interest rate decisions, and make yourself a note a good 2 or 3 days in advance to watch when those lull times are starting to form. So if you're starting to get an Aussie interest rate announcement, look and see what the Aussie dollar and the Aussie yen's doing 2 and 3 days out before its rate announcement. When you get into these lull times, in other words, when you come out of the sharp trending time, directional time, you started to just form into a lull, that's when you want to start picking your money up off the side of the road. And so if this were a euro interest rate announcement, then I could look to euro dollar. I can also look to euro dollar before Friday's NFP announcement, a day or two before that as well. And so euro dollar is highly favored anytime that it can be used because it has the smallest pip spread of any of the major currencies, so you're going to get in the money and to your 5 pip profit as soon as possible. But use these lull times, use these dull times that seem like they're boring and like watching paint dry to actually pick up money off the side of the road and grab those $5 bills, those $20 bills, those $50 bills that you're able to stick in your wallet, stick in your account during these times while you're waiting to get back into the big moves. So these are things that you can do in between when you're in my currency cross trader service and we've issued trades, and if we're in between trades or if we're in a trade and you want to pick up a little extra action that can be possibly a little bit more safe, this is a great way to do this. Interest rate announcements only happen every couple of months, but nobody does them typically at the same time. So they're spread out. These 8 economies are spread out over time. Now the euro and the pound tend to come out on the same day, but many others do not. So it gives you a ton of opportunities all throughout the year and the NFP announcements. Also, one final time when you can do this, not in an interest rate environment or in an NFP, is when you have the euro dollar trading in the Asian session. The reason why that could possibly be another one of these lull times is because your European banks and your U.S. banks are closed during those times, and so it tends to make the money flows in the euro and in the dollar not that great at those times, and tends to make them lull. And so you can look at pairs like the euro dollar and the euro pound in the Asian session, which starts typically around 7 p.m. Eastern time and will roll around until, let's say, 1 or 2 a.m. in the morning Eastern Standard Time. And these are the times when you can play these little mundane ranges as well. But specifically, your very best times are before your interest rate announcements and before your NFP announcements. Those are really the best times to pick these dollar bills off the side of the road. Hey, thanks so much for watching. Bye-bye.